Good day, ladies and gentlemen. Welcome back to another episode of this week's review. I've got the going to forexfactory.com and clicking on calendar, and I'll go to the week that we are moving into, and I'll obviously going and filter only the red folder news out. So you can see Sunday, Monday, Tuesday, nothing's happening. So I will not be in front of the charts on Monday or Tuesday. I might look at it, but I won't make any videos or take any trades. I will purely wait for the red folder days. Wednesday, 2 p.m. New York time as FOMC meeting. So there we could see some, aggressive moves. And what I've realized the last time the FOMC was, printed its candle, because it's so late in the day, it created a candle, didn't run both sides in the same day, but it ran the one side. We entered the trade and it consolidated till the next day and then complete the move. But be as it may, so Wednesday I'll be available. I'll be online. I'll be checking the charts to, obviously look for our setup to see if I can get a trade. And then Thursday we've got 8:30, a bunch of news drivers coming out. That will most likely give us an opportunity there as well. And then Friday, 8:30 a.m. New York time. All of these times are New York time. Most probably will give us. So there's only 3 days. Wednesday, Thursday, and Friday that I'll be in front of the charts, to make a video and to take some trades. And obviously this is not financial advice for you guys to go and do the same, but for journaling purposes and learning and, trade on your demo account, it'd be good to follow along with me, see if you can find, see the, the setup for market out, and maybe take some demo trades and see. And then when I release my video, you can compare it, you can ask questions and so forth. All right, so now we know what we're in for this week. Only half of this week from Wednesday, and let's jump over to the charts quickly and see what can we expect. All right, from my perspective, guys, I'm starting on a monthly chart. I know it's a very high, for me trading on a 1 minute chart. This is not a 1 minute chart. This is a monthly chart. And what I want to show you guys here, and we'll go to a weekly and a daily just now. So obviously we're not going to run to any of these levels in one go. Every candle that forms here normally takes a full month to, transform. But what I want to show you guys quickly, so obviously this red line here, these two lows, this equal lows, the sell side, it's liquidity. It's still intact. We still haven't gone down there. And it might stay there for a long time. I don't know. It might be a target for when when elections happen in the US, or for whatever reason. I don't know. But for now, that's not my target. Excuse me. And I'll take you guys through it now as to why. But what I want to show you guys, one thing that ICT teaches, through all his content, is that if you see long wicks like this and wicks like that, there's 50% of that wick is normally, a target for, to be rebalanced or whatever he calls it. But I like to call, to mark it out because I've been following it for a long time, and it is valid, if that's the right word, and I'll show you what I mean by that. If you just look at this candle here, made a long wick, and the next candle spiked into that 50% and then reacted from there. So I'm not saying every single wick, because if you look at this wick, we exceeded completely. But if you see a wick that stands out, that forms liquidity, like this is a catalyst for liquidity because it's equal lows, and this was the highest high thus far on the Nasdaq. So 50% of that, and we at the zero now, so we could see some sort of upside still to test that 50% before we reject or just run higher. So that if the market keeps going bullish, that's probably a target I will target when I look for my trade setups. So that 2730 level is a key level for me. All right, let's go to a weekly. So what I want to do here is I'm actually going to mark this out as a weekly, because I'm going to remove this so there's not too many drawings on here. Okay, so let's leave it there. We'll just say weekly C 50%, 50% CE. CE stands for consequent encouragement, and that's just a term that ICT uses. So I did not come up with that term. So, but anyways, all right, let's go down to a weekly quickly, and then I can show you guys what I'm seeing right there. All right, so there's the weekly, CE that we've marked out. Okay, it's there. Now, in this particular example, last week I've expected something else, and I'll mark it out in blue. So it's not. I said we've and maybe what I need to do is I need to just draw it all in so you can see it, and then we can talk through it. Okay, so here's the fair value gap on the weekly. Fair value gap on the weekly. We managed to run up into that fair value gap, and we've managed to leave. Let's bring this in. As you can see, normally a fair value gap, if it's a bearish fair value gap, you want to see price rebalance 75% of that fair value gap and leave 25% open, and then reverse, and then you're on site, especially when you inverted something or whatever the case is. But in this case, I looked at this last week and I said, guys, we crossed over in this fair value gap to the very accurately to that 75%, and we left it open. This week that passed, my expectation was for this candle to maybe go into this candle's 50%, and it almost got there, and then close the week lower, taking this low out, this one here, or this not the low, the open, and I'll tell you now why. Let's just get it all right. All right. Come on. And the reason I said if we close, leave this intact, and we close below here, well, it could close or spike below it at least, but just close down. That on its own is a formation that we took a liquidity out. We left 75 or 25% of this fair value open, and this formation is a formation to go short. Then I would have targeted maybe this low here. But unfortunately, this week we closed, we did not take that open out, and we closed within this range. That tells me that we might want to go higher first before we do anything going lower. And at this point in time, I am not by any chance bearish, and we'll just have to wait for this week to play out. And as you can see, we found support in this fair value gap, and we've got resistance at this fair value gap. So we're between two fair value gaps. So we might see a spike in this weekly consequent encouragement to drive price lower, or we close aggressively above and we make new highs. Either way, I'm not giving you guys anything at this point to say I'm short, I'm long, I'm bullish at this point in time, until such time you show me that you can invert this fair value gap and close below this line. If you invert this fair value gap this upcoming week, we run higher and close lower, okay, then I'll target these lows first, then a consequent here, and then this equal lows down here. But the other thing I wanted to bring to your attention, if you take this swing high to the swing low, 50% of that whole swing point is about here. This is in a deep premium at this point in time. That also indicates to me that we might see some sort of reaction. And last week I thought we'll get it with the setup, but we didn't. So we might get some sort of reaction up this week, and then definitely go down, lower, because we're in such deep premium. Premium means anything above 50% you look to sell at premium to the market. Anything below 50% you try to buy at discount. So that is the weekly. Let's see if we can see anything on the daily. Okay, so now we've marked out the weekly 50 consequent encouragement up there. We can see there's some, in this fair value gap, we've got some wicks in there on the daily, which is fine. And the reason I also think we might go up here is, see how this red line 100% lines up with this fair value gap, the daily fair value gap, to fill this gap. To the pip, it will fill it. And remember, the market is all about rebalancing. Every gap that they leave open, at some point will come back to rebalance it and then go into a direction. For those of you that don't know, here's a gap down here, and the gap is basically that black candle's wick does not overlay, and then you get this big black body, and then you get a third wick, and in between that wick and that wick's low and that wick's high, that's only downside. There's no upside that wicked into that to rebalance it. That's a unbalanced, it's a gap. You've got only sellers in there, or market only run in one direction, and normally you want to see a big black candle goes down, goes back, wick into it to rebalance, and then continue, and so forth. And even in this black candle here, we get some rebalancing and then drop, but then the market came all the way back up here to rebalance all of those gaps, and that's what we're after. We're looking at gaps that gets inverted, and then we target the next gap or the next liquidity, and normally in those gaps that is liquidity. And if you got wicks in there, that's a good place to run price into, to run liquidity there as well. But anyways, so I feel very strong that we're still bullish here. We got to move up here. Small candles came down. We found support in here. We did not close below this fair value gap, and we rejected aggressively on Friday. So we might continue from here, and we might go up and down between this before we manipulate into direction and then drop. So I'm not saying it's going to be Monday's thing. I'm just saying these are the levels that I'm looking at, and that's what I'm favoring. So if I see something on Wednesday, Thursday, or Friday, I always keep these levels in mind, especially if it runs a liquidity and it gives me an opportunity to buy. Then I would say, all right, so we could go all the way up here, up there, up there. So I'll mark it out, and I'll try to manage my risk and my position to such extent to see if we can get there. But that is what it is, and that is all that I have for us for now. And let's see what happens this week. Monday is not going to be a good day if you don't trade my strategy. Be careful on Monday, because it's after a nice big week of liquidity and news all over the place, and maybe the market needs Monday to just readjust, and then Tuesday find some sort of direction with manipulation on Wednesday, and then continuation the rest of the week or something to that effect. So I will not be in front of my the charts to give you guys anything on Monday or Tuesday. I might post something if I see it, But for now, I mean, I'm just going to stick to the strategy because that's what we're teaching here, or that's what I'm teaching here, and that's what I'm trading, and that's what I'm journaling and put into my YouTube channel. So guys, girls, if you find any value in this video, give me a thumbs up, subscribe, share, and I would really like to grow this channel as quickly as possible. And as soon as I get 1,000 subscribers, I will do live sessions on the days when there's trading. And yeah, if you have any questions, feel free to drop them in the comments below. And yeah, have a great Sunday for the rest of the day, and I'll speak to you guys during the week. Be safe and don't overtrade, and I'll see you guys when I see you. Bye bye.